Most people
Okay.
will check it out on YouTube or Spotify within a couple days. All right, and one, two, three. Welcome to another episode of Million Dollar Stories, where we get to interview authors from all over the world. I love learning new ways to make money. As you guys may know, I was a finance major at Duquesne University. And the reason why I wanted to become a finance major, I think, goes back to me watching the movie Wall Street. And I saw how successful they were and how much money they made, the pretty girls that were around them. And then when I was in school, I realized I didn't want to just own things. I wanted to create. And so I got away from finance, but I do realize it's a way to wealth. And I think we're going to learn quite a bit in this talk today about how to understand and utilize futures and options. The book is called Futures and Options Markets, an Introduction. We have the author here today, Colin Carter. Thank you so much for being here, sir.
You're welcome, man. Good morning, Mike.
Well, let's start off with the genesis of this book. You're a teacher, I know that. You probably live this stuff. Many people who are watching or listening may not have even a clue what a future is, right? So futures and options, kind of confusing, calls and puts. But maybe you can break it down for everybody. So what made you want to write this book?
Sure. Well, first of all, I guess commodities are kind of in my blood, Mike. I grew up on a farm, and so was very attuned to agriculture, and that's where these markets started. They started in the agricultural space, almost 200 years ago. So commodities are such an important part of our economy. And these markets establish the price of commodities, anything from sugar to orange juice to corn, cattle, you name it. More recently, the markets have expanded into the financial area, Mike. So now there's sort of, two blocks. We've got the financial futures, which are the interest rate futures and the exchange rate futures. And then we still have the traditional commodity futures as well.
Got it. And it does make you think of Trading Places. I'm sure you've seen that movie, right?
I have.
Yep.
It's a wonderful movie.
Right. It's I forget what they were trying to make in it, but it had something to do with orange juice, I think.
It was orange juice, yeah, and
Yeah.
yeah, the two brothers had a bet as to what constituted a good trader, and Eddie Murphy found a guy who could send him the USDA report in advance of when the report was made public, and he was making a lot of money having that advance information.
Well, guys, you will like what he has in this book right out of the gate. And it says, Box 1.2, what is the probability of turning $1,000 into $100,000 in just 10 months of futures trading? The correct answer, he says, is the above question is that it is a feat that is virtually impossible unless you are Hillary Clinton. All right. The former U.S. Secretary of State, when she was young, and I didn't know this. I know a lot about her corruption, but I didn't know this one. When she was young, Clinton made international headlines with her amazing speculative profits in cattle futures contracts. Her ability to trade futures contracts became an issue when her husband was running for president of the United States. According to press reports, Mrs. Clinton started trading commodities in 1978 on the Chicago Mercantile Exchange, and somehow she was able to turn her initial investment of $1,000 into $100,000 just after 10 months of trading. Either she's a genius like Nancy Pelosi, or there's something else going on.
Yeah, it was kind of a miracle, Mike. And I remember at the time, Hillary went to a conference in Beijing, and it was this women's conference, right? And she thought everyone would be interested in talking to her about, how Bill moved up in the political spectrum, but no, they wanted to talk about cattle futures.
Because all of a sudden she was the oracle of cattle futures, really.
That's right.
It's
Yeah.
great. Interesting. Everybody kind of knows, right, deep inside their soul what's going on, but many people just don't have the courage to talk about it. So pretty fascinating. But how did you get into this? What made you fall in love with this I guess you could say industry?
Well, I've always been interested in markets, right? there are two beautiful things in the world. The first is Mother Nature, and second is markets. So I've always been in love with markets, and the futures and options is sort of the epitome of the competitive marketplace, Mike. It establishes the price of, let's say, crude oil for delivery next month or delivery in 3 years' time in 2027. So uh, these markets do a fantastic job of collecting information from around the world. So, if you're a wheat farmer in India, or you're a sugar farmer in Australia, you can look on your cell phone when you're out in the field and you can see how much the value of your crop is changing on a daily basis, given supply and demand information from around the world. So it's all concentrated into these markets, and buyers and sellers bring their information, and what comes out of that every day is the price. So it's really, I'm an economist, and it's fascinating to see the economics at work uh, in the futures and options markets.
Do you see any type of great trends or scary trends as of right now? I know that there's sort of a war on farmers, and I see what Bill Gates is up to, and I just think that there's a lot of scary things happening. Strange things are afoot at the Circle K, as I've heard in the movie Bill and Ted's Excellent Adventure. So, is there anything you're seeing that is good or bad?
Well, right now in the commodity space, and I'll set aside financial futures for a second, Mike, is for the most part, we're on a downtrend. The so-called super cycle in commodities that was expected to happen after COVID never really happened. We had the outbreak of the war in the Ukraine 2 years ago, roughly 2 years ago, and that really sent some commodities up dramatically. I was living in Europe at the time, Mike, and the price of natural gas almost doubled. The price of wheat went up 30% and so on. And natural gas is so important. I mean, you and I could not eat without natural gas, Mike. It's used for heating. It's used to make fertilizer. And at the time following the war, people in Europe were almost afraid to turn their toaster on in the morning because the price of electricity went up with the price of natural gas. So we saw that after COVID, we saw that jump in the price of many commodities, but it was short-lived. Came back down 3 or 4 months later, and today, with a slowdown in the Chinese economy, China is a huge importer, huge buyer of commodities. We're seeing the price of many commodities falling with a slowdown in China. And, we haven't had any crop failures or that sort of thing recently. So in a way, that's good. Products like aluminum, lithium, iron ore are at relatively low levels. The price of raw commodities, agricultural commodities such as corn and wheat, are not high. So that's good for the consumer. But as you said, the farmers are protesting in different parts of the world. They're protesting in India. They're protesting in Poland. The farmers aren't happy right now. But look, these markets come and go, right? And you mentioned that most people don't realize how important these markets are. It's really true. But if you think about how these markets affect our daily lives, Mike, you get out of bed in the morning and you might turn up the heat register. Well, that's probably fueled by natural gas or heating oil. You make yourself breakfast. The price of orange juice, the price of wheat is determined in the futures market. You put petrol in your car. There's an important market for petrol in the futures market. I mentioned natural gas, and then you can go on down the list. Precious metals, cotton, and so on. So if you look around the room, you'll see products that are based on trade in the futures market. So when you ask me what trends we're seeing today, well, we're sort of on a downward trend at the present time, but we know for sure that that will change.
No, I believe that you have to be very involved and it's a very active lifestyle, right? You have to be managing a portfolio based off of your data, your research. And so my investor DNA is you buy something and you hold for a long time and you kind of forget about it, right? I buy self-storage or a share in self-storage. It just kind of makes money. And I don't think about it until potentially 3 to 5 years from now, whenever they sell it or refinance or whatever. So, but I have a business that is I'm very active in, right? I help people publish books. I help them market it, generate leads. So that's where I kind of found my expertise. When it comes to futures and options, I believe, and maybe I'm wrong about this, you really have to have the investor DNA to kind of want to be in that world all the time because it's a very active approach. Am I right about that?
Oh, you're absolutely right. It's not only active, but it's quite volatile. In fact, we have a futures market based on the volatility. It's called the volatility index. But um, the answer is yes. If you're actively trading, Mike, many of these markets trade almost 24 hours a day. You barely have time to go to the bathroom. So um, that can be very stressful. But for someone who's busy doing other things like yourself, there are alternative ways to get a piece of the commodity market. And more recently, that's come about through ETFs, exchange traded funds. So if you are interested in, let's say, agricultural commodities, and as I explained, the price of many agricultural commodities has actually fallen since the war in Ukraine 2 years ago. Now, if you thought that was going to turn around, uh, then you could buy an exchange traded fund in that space, and you could go on down the list. If you're think of currencies. The futures market for currencies is very large, and I include in that the options market and swaps as well. But we have an election coming up, Mike, and that might affect the value of the U.S. dollar. Uh, it might affect interest rates. Uh, so you could position yourself uh, in that market. And as you said, it's probably not a great idea to actually be buying the contracts yourself because you have margin calls and you have to get up in the middle of the night and check your markets. And who wants to do that? So uh, fortunately, these ETFs offer a very convenient way of putting part of your portfolio into the futures and options space.
Well, I do believe that if you don't have a lot of capital, futures and options are potentially the way to go. And I think what I'm reading here, it says both futures and options trading allow investors to leverage their positions. This means that traders can control a larger port position with a smaller amount of capital. And so is there way more leverage with this I guess play, this chess move than let's just say regular day trading?
Oh, there's tremendous leverage in the futures market. You can control, say, 1,000 barrels of oil that are worth $80 a barrel now for probably 10 or 15% down. So uh, that's good in that if the price moves in a favorable direction, you'll make a lot of money. But of course, the downside is if it moves against you, you can lose very quickly. So as I mentioned, ETFs, you can enter into ETFs that are leveraged themselves, so you can get like 2 times a market move or 3 times a market move. So you can take advantage of the leverage also in the ETFs. Taking advantage of it in the market itself is really only for professional traders, in my opinion.
Hmm. Yeah, I would think me personally, if I was going to get in this world, I'd have to be like a fly on the wall in an expert's room to see exactly what their day to day looks like, but to see the process from start to finish. And so things like the interest rates that just went up recently, I don't really pay attention because I'm not in that world. I have a lot of clients that are in the commercial lending space and they're in real estate, so it does affect them in some of them drastically. But luckily, I'm not in that world, and it's a crazy world. I'm assuming anytime the interest rates get adjusted, it is going to mess with you guys quite a bit. So, what has happened over the past, let's just say, year since they started raising interest rates?
Well, if we go back to roughly a year ago, um, when the Federal Reserve started to raise interest rates, there was an institution called the Silicon Valley Bank. You might remember them, Mike. They went bankrupt
Yeah,
in
I
March.
remember hearing that. Yes.
Yeah. And that's because of the upward move in interest rates. And this bank, even though given its name, it turns out they weren't very sophisticated in terms of risk management. In the book, I say traders in agricultural commodities have known about the benefits of hedging for almost 200 years, but the individuals running the Silicon Valley Bank sort of missed that chapter. They had very large positions, Mike, in assets that were sensitive to interest rate changes, very sensitive to interest rate changes, and they put themselves in a position where they literally went broke in a week's time. So yes, interest rates are critical. You say it doesn't affect you, but you also tell me, you're investing in equities and so on and so forth. Well, interest rates will have an impact on your portfolio there too. So uh, once again, these markets, they offer us a bit of a crystal ball on interest rates. So I mentioned the election. So depending who wins the election, we could have a move in interest rates. When Donald Trump was elected in 2016, uh, there were huge losses in the bond market because bond prices plunged. Uh, when Liz Truss was elected prime minister in England, no, she only lasted 44 days, but there was a big drop in the bond market in England because the market was not very comfortable with some of her policies. So if you look into the futures market, you can actually obtain some idea of where interest rates are going. It gives you
Wow.
some idea of spread between long term and short term. And one thing that's really cool, Mike, is the Federal Reserve sets short term interest rates, and they have meetings, where they're very closed mouth, and the meetings go on for a couple of days, and then you've heard the news. They come out and announce a change in the Fed fund rate. Well, there's actually a futures market that predicts what they're going to do. So you can look at that futures market, and today it will give you a prediction of when the Fed is going to start lowering interest rates. Excuse me.
Yeah, and
Uh,
where can people find that? Is there a certain website that you go to every day? I'm sure you have many different programs, whether it's Bloomberg or something, but what do you
yeah,
recommend?
a great website for free information is barchart.com. They have a whole section on commodities, and you can go there and you can read about the Fed fund futures, and you can catch their prices daily. It's a great source of information.
That's funny you say how whenever Trump went in 2016, the bond market, you said, went out, which is wild because maybe it did it come back because I'm thinking they had the strongest economy in 2019 ever in recorded history. So did it eventually start
Yeah.
to pick up steam?
It took a long time, but it basically blew up the bond market, right? And it's estimated like $1 trillion in value was lost. Also, at that time, uh, the Mexican peso tanked after the election because his victory was a surprise, right? No one expected him to win. And so when he won, the bond market got blown up. The Mexican peso tanked about 10%, and it got totally clobbered based on uh, some of the things he said about Mexico. But it turns out he didn't do all of those things, so it eventually came back.
Wow. Yeah, and so whenever I was in school, we analyzed the bot and different currencies, and I guess you're seeing what's going on with the value of all the currencies. And I don't know what's going to happen whenever BRICS starts to really pick up some momentum, but what do you believe is coming down the pike when it comes to the dollar not being what the the reserve currency for some of these countries, and then moving to the BRICS? very scary in my opinion.
Well, the dollar's still king, and people have been predicting its demise for many years now, but it's, it is still king. So I don't think this is going to happen anytime soon. But, uh, the BRICS are having a really important role in all of these markets, and not just currencies. And I guess one of my favorite countries is Brazil. You know, uh, they're a very large player. They produce about a third of the world's coffee, uh, Mike, um, and a very small change in the weather in Brazil can have a big impact on coffee prices. They account for 80% of the world's orange juice exports, half the sugar exports, a third of the coffee exports, a third of the soy and corn exports. So what happens in Brazil is crucial for a global commodity market. It's crucial for you and me and all these other players out there. So that information is evaluated by the futures market on a daily basis.
Yeah, I had no clue that Brazil was that instrumental to the world when it comes to commodities. Really, had no
They're
clue.
huge. Yeah, well, pay attention next time they raise the price of coffee at your local Starbucks. Chances are something happened in Brazil.
Wow. So what are you seeing whenever it comes to this year? I look at this year as a year of chaos. Is there anything that's kind of shocking, or maybe because it's an election year, it's very volatile. There's a lot of movement, or maybe less movement. I don't know. So maybe they even sort of predict uh, presidents in the past, right? You're able to see where the financial markets going. It kind of is a sign of things to come. So this year of volatility, in my opinion, is it more volatile than usual, I guess?
I think it is for a number of reasons. We have uh, a lot of turmoil in the Middle East uh, that has big impact on the energy sector. We have the Ukraine war, uh, and then we have the election, as you said. So,
And
absolutely,
and there's
that
more elections this year than any time in
other
history.
countries.
Yes, in history, more elections in
Yeah,
the world in this year.
yeah,
Think about how crazy that
yeah,
is.
yeah. Well, it's so it feeds into volatility. So, as I said, there's a volatility index futures. So, uh, that's sort of an index of how crazy things could get. Um, but our election in the United States also has implications for, I mentioned interest rates, also the spread in interest rates between short term and long term interest rates, which is called the yield curve. It has implications for um, commodity prices because there's been a threat by one of the candidates to impose import tariffs um, against foreign nations, and that's going to dampen trade in commodities. So it's affecting all these markets, whether it's currencies, interest rates, or the price of copper. It's the election is playing a role.
Hmm. Yeah, and if you want to hold up your book, your daughter drew the picture. I want people to see this, or
He
anybody's watching
did.
on YouTube, or whether it's on social media. But
Can you see that?
yeah, let me see it. I'm looking at my. Yep, there you go. And you
Yeah.
and maybe if you want to explain what this is all about or why she did this, but I just look at middle America. This is
Yeah.
such a huge part to your daily life. You have no idea, but
That's
treat the
right.
farmers right. And it's I was just talking to somebody today about, you know, rewarding your local community and getting money into the pockets of the farmers and in your in your community nearby, rather than trying to send it overseas and then have it come into your country or from out of state. So obviously your heart is in that world where you do
That's
see
right.
the
Yeah.
power of what the farmers do, and I think they've been mistreated by especially this administration. So is there anything that stands out when you look at that picture? I mean, is it basically middle America should be cherished, really?
And commodity markets should be cherished. My daughter's name is Alicia, and I asked her to draw this cover for me. And I just gave her a few suggestions. I said, I like tractors, I like wheat, I like coffee. So she captured that. And then all of her words, have to do with what's going on in the markets, derivatives, leverage, swaps, speculators. So I think she did a great job. And as you said, it's just such a big part of our lives. And it always amazes me when I meet people, they really have no idea about how this market works. And, when they go into the grocery store to buy a carton of orange juice or a pound of coffee, they really have no idea how those prices are established and what factors play a role. And it all comes down to the futures market.
Hmm. I think the first futures market in recorded history was Tulip Mania. Is that right?
I think so. Yeah.
Yeah. And I
In
think you said it was
Holland,
that 200 years ago? Maybe more than that even,
at
right?
least. Yeah.
So
Yeah.
if you
There were,
guys look that up, it's pretty fascinating.
yeah.
Tulips, you would never guess that they had extreme value for a brief amount of time, and then it came crashing down, and individuals lost their houses, I think, on this, their estates.
Oh, they did. Yeah. I mean, one tulip bulb could cost more than your house at the time. So it was absolutely crazy.
Yeah, that's how it all came to be. I mean, think about all the wealth that's being transferred. What's your day look like though? So if individuals started to get into futures and options and starting to, maybe study a little bit about commodities. I have a few clients that are in this world, but what's your day to day look like? Or is it something you just do in the morning and then, okay, let's check it out at 1 o'clock in the afternoon? Because there's a client that I've worked with and he actually has software that kind of tees up. It's basically, he calls it the T box, and he's able to have mathematical equations and able to figure out, okay, this is the buy box. Once this happens, we know it right around 2 o'clock in the afternoon, this happens. And so he evaluates based off of times of the day. And so is that what your day looks like? Or are you sort of a little bit more automated where it's once a day or just throughout the day?
No, I'm old fashioned. And when I first started trading, the markets weren't open 24 hours a day. They opened at 9:30 in the morning and then they closed at 1:30. So, uh, yeah, I would start my day early in the morning with a cup of coffee and, just seeing what's going on in the markets. And there's a famous economist, John Maynard Keynes. You may have heard his name. He's a famous macroeconomist. He was a big commodities trader. He did a lot of important things, but he spent the first hour or two of each day trading futures contracts. He was really big in cotton, for instance.
Wow. Yeah, and I think that when when I when I first heard about futures, it's basically farmers wanting to lock in a price for their crops at a certain position. And I mean, they I guess if they don't do that, they can get hurt pretty bad, right? But if they have faith in what their crops or they have the faith in the market, they can reap incredible rewards. So, who wins and who loses, I guess, on an average basis.
Okay, so it's not just farmers. That's how it started, as you said. Um, and yes, farmers use these markets to, try and lock in an attractive price. A gold mine in Australia would do the same thing, or sugar mill in Brazil would do the same thing. Uh, but let me give you another example. It's airlines, Mike. So
Hmm.
airlines consume a lot of fuel, right? If you fill up a single Dreamliner, that's 30,000 gallons of fuel. Imagine handing your credit card over outside the cockpit and say, fill it up. So they have huge fuel expense. It's their second largest expense after labor. And if the price of crude oil changes by $1 a barrel, it's said that it costs the airline industry almost $500 million. So uh, that's a big risk for them. And they're very active in these markets, the same reason the farmer you mentioned. And they try to mitigate the risk of fluctuating prices. And they pass it on to you and I in terms of lower airfares because they're trying to minimize the risk of this very large input. So, when COVID hit, a lot of these airlines actually lost money in the futures market uh, because they were holding long positions and then the price of oil plunged, right? It went down to zero. And they had forward purchased all of this fuel that they didn't use because they weren't flying. So they lost, millions and millions of dollars. But guess what? Once COVID is over, they're back into the market. They're back hedging uh, to manage their risk. So who wins and who loses out of that? Well, I would say the airlines that do manage the risk using the market tend to do better, and you can check their stock prices. Uh, Southwest is very effective at hedging, um, and they tend to outperform some of the other airlines. So I guess their investors benefit. You and I would benefit as a passenger on that. And then on the other side of the market, uh, futures trading is what we call a zero sum game, Mike. If I make $10,000 in the oil market, somebody else is losing $10,000. But those could be producers. For instance, let's say the Mexican government, they control exports of oil, and they're worried about a fall in the price of oil. The airlines are worried about a rise in the price of oil, right? So the airlines might go long, they might buy oil futures. Mexico might sell oil futures, and they're both protected. Uh, so the other side of the market could also be a hedger. Uh, so they're also buying insurance. So it's not exactly as though they're losing. Uh, there are speculators in the market. Uh, Large hedge funds are big participants. But it turns out at the end of the day, because these prices are so hard to predict, actually the large hedge funds they're not taking a lot of money out of the markets. So I would say that the airlines or the oil companies or the farmers are getting some pretty reasonably priced insurance when they enter into the marketplace.
Wow. Yeah. So you said hedge funds don't take a lot of money out of the marketplace. So they're
No,
oh, okay.
they pretty much break even. You
Wow.
know, they charge their clients a certain margin, so they make some money, but their clients don't make money for the most part.
To get in this world, you have to be very and I see it in you, very analytical rather than emotional, right? Be very I guess you could say more of a sniper and not let your emotions get involved. So is that sort of a strength that you have and that you recommend if you're going to get into this world and do it consistently slash professionally?
That might be a good way to characterize it. I think you have to have a certain market savvy, a certain amount of common sense, and then, as you said earlier, you like to put on a trade for weeks or months, and that's something you can do in these markets if you use ETFs. And just think about it. Okay, if the election goes this way, what's going to happen to uh, this currency market? Or if it goes that way, what's going to happen to the price of copper? Uh, and if you approach it that way, um, it's a lot of fun, and you might make some good money. Uh, but it's so exciting, Mike. Uh, but you certainly can't be up all night watching the markets, or you couldn't conduct the rest of your life in a proper fashion.
And you're a teacher to this day, right? So you are educating students on this matter consistently. What's the reception there? Are people in this to, are you seeing them adopt some of the things you're teaching and apply to getting involved? Or like me in school, I just learned it to pass the test and kept moving
Yeah.
on.
Yeah. Uh, okay. So yes, I do have courses at University of California, Davis on these markets, and the enthusiasm is extremely high. The students love it. Most of them come into
Really?
class. They've never heard of these markets. And then I tell them, well, look at the shirt you're wearing. Did you have a cup of coffee this morning? Did you have a glass of orange juice? Did you put gasoline in your car? Those things are the prices are determined in the market. So uh, the reaction has been really, really positive. But I will admit, Mike, the last day of the lecture, I sort of have a serious talk with them because my biggest fear is they're going to run out and open accounts and think, they're going to get rich. uh, that's not my objective. So I give them a lecture about how a little bit of knowledge can be dangerous, right? So I try to be realistic.
Yeah, it sounds like you give them just enough to be dangerous, but we warn them beforehand. That's good.
That's right.
Oh man. Okay, so is there a book outside of your own book? Is this, do you only have one book? Is that right?
Yes.
Okay,
Yeah.
outside of your own book, is there one that you recommend maybe that gives some insight or maybe puts you on this path? Or, I mean, you're a free market guy, it sounds like. So maybe you just fell in love with investing or entrepreneurship or capitalism through a book in the past. Is there anyone you recommend?
On the commodities market in particular, you mean?
Anything that stands out. The reason why I bring that up is because without a book called Rich Dad Poor Dad, I would not be here today. I read that. I was 22. I went to school, and it's funny. My love of education did not happen until I left school. Think about how crazy that is. So,
Uh,
so I read that book. It changed my life, and that's why I'm here today, 17 years later. So, is there anything like that for you?
uh, Actually, there isn't. No, it's not that a single book changed my life. I guess I learned about these markets kind of from the bottom up. I actually, worked at a commodity exchange for a time being, um, and a lot of this information is actually not available in books. My textbook tells you how the markets work. Uh, I provide a lot of interesting anecdotes and stories. I look at different ways to analyze the markets, but then you're pretty much on your own. There are a lot of books out there that I wouldn't recommend, but we won't get into this.
Yeah, and then you'll get sued. No, I'm kidding. I'm
Yeah,
kidding.
that's it.
Um, to get started, I think there's a few websites. I don't know if it's E-Trade or if it's I would never recommend Robinhood, just say no. But like, which sites
Yeah,
can people get started with? Because they don't need a license to do this, right? They can just get involved and start doing it on their own. Is that right?
that's right. Yeah. So, as I said, a website that I use every day is called barchart.com, and they have a commodities thing, and you open that up, and you could look at copper, and they have news stories on copper, and you have all the copper prices and all the charts, or you can look at crude oil or cotton, whatever you want to do. It's all there. And if you wanted to start trading one of those, then I would recommend doing some research on the ETFs, uh, and then you have to open an account, with Schwab or somebody like that, and it's pretty cheap to trade these markets. The fees have dropped dramatically.
So the only reason why I would love to just start learning the numbers of what the futures are saying, right? Because then you can maybe become a better investor even. But does the media play a major role in all this? So like I look at the media, it's just full of propaganda. So do you kind of play the game based off of what the propaganda machine is spitting out? Have you noticed that? Or does this cut through a lot of bullshit and you see things that the media is not showing?
Yeah. Oh, I don't pay a lot of attention to media on these markets, and I'll just give you an example. When the war broke out in Ukraine 2 years ago, uh, I got a call from a lot of different media outlets, and Radio France did an interview with me, and the guy was saying how this war is going to impact uh, everybody living, at the poverty line in Africa, and it's going to cause all this starvation. And he was going on, and I just stopped him and I said, no, that's not going to happen. The prices will go up for 1 or 2 months, then they'll come back down, and will have no impact on starvation in Africa. So there's really a tendency, given that we're dealing with food or we're dealing with energy, for the media to take these stories and run. Uh, and most of the time, you know, the message is just not valid.
Good. So yeah, you're able to shutter all that out of your mind and you don't care too much about what they're saying. You kind of know what to focus on. And no wonder you're at peace. You just seem like you're at peace. You're in a nice area. Where are you located?
Northern California, Davis,
Of course,
California.
yeah, Northern
Yeah,
California. It looks really
yeah,
nice and sunny out there. And the
it
boat
is.
seems like one of the reasons why I kind of was drawn to that world is because you could basically work from anywhere. And it seems like maybe you're out on the boat doing trade sometimes,
Yeah.
right?
That boat was actually hand built by a gentleman in Galway, Ireland. And that boat is called a Galway hooker.
Go-
and it's a beautiful boat.
Do you have one? The real
Not
size
not a
one?
not,
Oh, okay. Gotcha. I didn't know if that was a
model.
symbol of freedom. I know some people have their private jet pictures and
Yeah,
videos and all that in the background. So,
yeah.
but yes, it seems like futures and options are a great way to understand what's really happening in the world. So I want to get more involved with just understanding what the numbers mean. Never got into it with school. I just passed the test, got my B, and I was moving on. So time to go back and start looking at this stuff. But I really appreciate your time, guys. The book is called Futures and Options Markets: An Introduction. And Colin Carter, is there a way to get in touch with you? I don't know if you're a social media guy or a website that you recommend.
Yeah, you could just look me up at University of California, Davis. The book is on Amazon.com and it's reasonably priced. So I start with that.
Yeah, and it just came out in June of 2023, so it is up to date. I know a lot of people get nervous about those type of books but this is a very recent book, so look it up. And Colin Carter, thank you so much, man.
Thanks, Mike.
Remember, guys, $1 million book will lead to $1 million life. Right on.